Hi traders and welcome to the Technical Analysis Market Watch on Friday the 1st of March. So I've seen some very aggressive attacks on some key levels on some of the currency pairs this week, and they are really fighting for survival at some very important zones. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and this is one of the main culprits of the all-out assault really on the 65-cent mark. It's really battled to hold up there. You can see, obviously, we've been talking about this for a little while now, where we've seen a lot of resistance at the 65.50 to 66-cent mark. The big wicks have really held it down. The buyers have actually lost every battle they've entered. You can see that, and the 20 moving average has done a very good job holding it up. But now, yeah, it did have a very decent go at that sort of 65-50 cent mark and broke down through it and did break down past 65 cents. But you can see, even in today's candle, and I think today's candle tells us a lot about how this battle's going, because in reality, if we actually get a break below that 64.50 mark, the 63-cent mark is actually the next logical target, and that's quite a bit away. So really, there's not a lot of support up until it gets to that down that level, but we still need to see a break of this key level here. Now, the bulls have had a fair dinkum go at trying to get it back up again. You can see we've got a very big wick. Now, look, this candle's not closed yet. We've still got a couple of hours to go before the candle actually closes, so I guess it could still rally. But right about now, if we are closing with a candle that looks a lot like this, which is very similar to the previous wicks that we've had throughout the last few weeks, it just goes to show that the bears have again won this battle, and it's pushing a lot of pressure on that 65-cent mark. So it's really trying to break down. Really important that we get a break below here, though, prior to actually trying to short it, because we need that momentum to continue. But look, I like what I see. It would take, for me to be looking at like long opportunities at this one, we need to close above that 66-cent mark. And until we get a close above there, I wouldn't even consider the long, because you've got all of this friction in front of you. That resistance is strong. We've got the moving averages got to get through. A move up is a long, hard road. So I'd be looking for shorting opportunities, really, not probably even entertaining the scalp, because every scalp is getting bashed up. Every scalp long is getting beaten up badly by the resistance and the bears. So be on the lookout for shorting opportunities. A close below the 64.50 is what we want. And then we're open here down to around that 63-cent mark. So good trading on the Aussie again, though. If you got that short from up there this week, it's been a really good one. It's only been about 50 pips, but a very solid 50 pips. That was very likely to happen. So hopefully you're able to get hold of that. US dollar CAD, and look, it did the job as well for us. You can see that it launched off its zone that we were talking about last week, the 20 and the 50 moving average, ribboning through here. So yeah, good move up. You hit the target of that 136, which is great. Hopefully, I know a few of you got that. So that was a pretty good trade. But look, that's a target right now. Even though it's making higher highs and higher lows, technically, from a technical standpoint, they are very shallow highs. Okay, so I'm mindful of that. And it just means that we've got to be a bit caution. We've got to tread with caution above that 136 mark, because it's not really blowing us away with a great deal of momentum. It's kind of just grinding its way up there to these key levels. So this is no exception. You can see these highs here. If I drew a trend line across the top there, marking all those highs, I mean, it almost looks like a horizontal line. So yeah, we are mindful of that. Everyone has been a struggle. So just be careful that when it does eventually break the 136, it may well stop here. It may have a bit of trouble getting through there. But if it does break through the 136, I would wait for the pullback before I would get involved. Let the momentum actually kick in and show us, prove to us that there is enough momentum there to carry us through to the next level of 138.50. If we fail at this point here and starts to lower high, lower low sequence on a smaller time frame, I'd be looking at the 135 as the target. The 20 moving average is moving basically in a sideways position, so it's probably going to hover there and give us support in the interim, especially if we get there in the next few days. So that will double up that support base along with the highs and the previous resistance, of course. So 135 would be the target. If it rolls over here, if we get a sequence of lower highs and lower lows, we can jump on in and have a look at trading down to around the 20 moving average or the 135, depending on where it is exactly at the time. Over to the US dollar yen. And look, this one, it was flat basically for most of the week. Then it had an attempted sell-off in today's session, has pulled up. No real surprise there, given what has happened with the Aussie. and obviously the euro, which we'll have a look at in a minute. But you can see that the 20 moving average has held it up. Look, in my mind, all you're doing here really now is just sort of hovering if you're going to scalp it and you want to trade the US dollar yen, I'd be looking at scalping opportunities between the 150.80 and also the 20 moving average. I wouldn't be playing underneath the 20 moving average until we get a daily close below there. Okay, so just be a bit careful there. What I'd be looking for is, set your horizontal lines at around 149.60 and 150.80 and just play inside that zone. Just sort of scalp inside that zone with those barriers as your targets. Until we actually get a break, above 151. And at that point, we're still looking for a retest anyway, so you want to be careful with that. But a break below the 20 moving average, and when I mean a break, I mean a close. If we get a close below 149.50, then we're going to start looking at targeting the 148.50 as the next potential move. So until that happens, if you want to trade it, just scalp in between those two zones, and that should be a relatively safe playing field. Let's go over to the US dollar yen. Sorry, we'll go to the dollar index now. So dollar index, again, attempted to move down. It's been a little bit flat. It had a very strong attempt at that 104.20 the day previous. And as you can see, it's trying to get there again today. It did shoot down a little bit. It's very, very wicky. This week has been a very, very interesting week in terms of battles between the bears and the bulls on the dollar index strength. And look, at the moment, you'd have to say the Bulls are still winning. The Bears are still winning. The Bulls tried effectively to get it down below 103.70, which is a decent attempt, but there is a lot of problems there. As you can see, we've got all of this area here that is going to attempt to hold that up. So even if it does break through this part here, it's got all sorts of problems at 103.50. So the preferred trade is still the long. And look, technically speaking, we're still making higher highs and higher lows in the bigger time frame, which tells us that we're still in a long-term upward trend anyway. So really all we're doing is going with the prevailing trend. And if we get a close above that 104.30 area, it really opens itself up for a move up to the 105. But of course, the euro is the one we want to trade. That's the one we're looking for here. And again, we can see that it basically sold off similar to the Aussie at that resistance point. We know there's very heavy resistance at 108.50. So it did sell off there. Look, it tried to rally. You can see, its wicks are just as interesting as the dollar index, really. Its wicks over the last couple of days have been very, very heavy, and we see this big one here, big attempted move up. But the bulls cannot get this past this level right now, and until they do, so really, in order for us to take a long opportunity on this one at the moment, we really need a daily close above 108.80, and that seems like a long way away right now. So you can see that we're selling off this in this period. Again, this is not closed yet, so this candle's still live. But if we get a candle close similar to where we're at now, or even a little bit lower, it does spell, a fair bit of weak momentum going into the next trading session or early into next week, where really the 107 is actually the target. And look, again, this is an overall trend that's going down. You can see we've got lower highs and lower lows everywhere. And if we actually have a big look at, what we'll do, we'll draw let's have a look at this. We'll put a fib over the entire move. And let me bring it across through here. Oops. Okay, so you can see if you measure the entire move, all it's done really is creep up to the 38.2, which we know is an aggressive fib level pullback. So realistically, all it's doing is the fib doing its job. The last major swing that we can see here, if we're looking at the top to bottom, you can see that the 38.2 is actually pulling this up. And even if you went to the absolute high and did that, the fib is still in play. You can still see the 38.2 is at a very, very strong level, tested it and failed to get through it. Okay, so twice, and that hadn't happened this week as well. So no real surprises there to see that weakness. And just be mindful though, if it closes below the 20 moving average, it does bode a fair bit of negative connotation for the next trading session and early next week. All right, and the S&P 500, nothing really to report here, other than what we talked about last week, but it's had an extraordinarily small trading range. For it, it's obviously been pretty solid up until now, but we've effectively seen a week of absolutely nothing. We've traded within a bound of really effectively probably less than 1% nearly for the whole time. We had lows of 58.50 and highs really of 50.98. So we've had hardly any movement at all. Same rules applied from last week. We know that we're at an all-time high. We're really just waiting for it to do something. If it goes higher again, we wouldn't take the first one. I wouldn't anyway. I'd wait for it to come and retest from above. that would give us a bit more confidence that the momentum is going to continue, or we just let it start to roll over. And if it continues to roll over and we start the series lower high and lower low on a smaller time frame, we aim for the 20 moving average in the first instance, and then when we get a daily close below the 20 moving average, then we start to target the bigger falls on this one, but nothing really to report. Very flat there. So I hope you've had a great week's trading. We've seen some really good results on the currencies. They hit all of our levels, and it looks like we're set to continue next week with some breaks of some very key zones. So hopefully you're able to get hold of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.